is riffing.
My tummy hurts.
Pretty good, right back. What's going on, guys? Nick with Off the Chart Trading, doing the daily recap for Thursday, November 18th. Figured I'd start with Lucid. I mean, this wasn't too surprising that we ended up seeing a pullback today. Kind of gave everybody a heads up yesterday, especially after it hitting, I think, 61, 62 pre-market. That probably a good sign that we'd probably end up seeing a little pullback. Because normally when you have that like gap up and then it fades into the open, there's a chance that it will retest those highs from pre-market, but it didn't feel like there was that much volume. And typically when there's lack of volume, especially on a hype-driven, I mean, it can be any stock that goes up, a couple 100% in a very short period of time. Eventually, the gas in the tank runs out, and either shorts pile in. Typically the shorter time frame traders are the ones that get out first. They're the ones buying it at 60, and then if they realize when it's down to $55 or $50 that they made a mistake, they get out first, and that just causes more selling, almost like an avalanche of selling or a cascading effect, whatever you want to call it. But I will say I was impressed when we were talking about it in the room right before the end of the day. I mean, it wasn't looking good. I was telling people I wouldn't be shocked. And I was saying this on the way up, too. This wasn't just today. I mentioned, when you have, and these are my color-coded candles, the script is pretty simple. It's just basically saying price is above the 8. When you have that 8, 21, 34 cross, and you have basically nothing but green candles for the entire, a little over a month, it's safe to say it's going to eventually, come back to earth, slow down, cool off, whatever you want to say when it comes to that. But I was assuming it would come down to the 21, which and at the end of close would be $40.33. So I was telling people probably around $40 is a good level. That's that psychological number of 40, just that clean number. I talk about that a lot in the room too, though, how psychological, you get a stock that's going to 100, that's probably going to be resistance, even if you don't see it on a chart, because it's entering triple digits. It's 100. It's clean. It's a big psychological number. So I'm big into that sometimes as far as being resistance and support. And I think you look at the number 40 in general, and then also look and cross-reference the 21. To me, it just felt like it was coming down, especially when it got down to 42.50 or whatever the lows were, low 43s, high 42s. And then, roughly about an hour before the end of the day, we ended up reversing and actually closing right above the 8. So I was actually kind of surprised, to be perfectly honest. You'll see that red arrow down. That's a script I made for Brett. His more aggressive trading. Even though it's on a daily chart, it is the first one we've seen. Granted, last time we got it, it was only for one day, and then we ended up blasting up higher. But basically what that red arrow is showing is a cross of the 2, the 4, and the 6 EMA. My white bigger arrow is the 8, 21, and 34. Sometimes it's just easier. Instead of having 1,000 EMAs, it's just nice that I know, as of today, the 2, the 4, and the 6 are stacked negatively. So that's one thing I do like about Thinkorswim, or if you think about it, or maybe it's in the name Think, but if you can think it, you can make it with ThinkScript and stuff. So pretty cool, and just one other little indicator that we offer for free as well for members. But anyway, really shocked that it ended up closing at its 8. A little weakness after hours, not much though, about a 50-cent drop or so. But we'll have to just see how it is into tomorrow. Like I said, my end of year target for the stock was $30 to $35, 35 being the more bullet, extreme, just because of, they don't have much. They have a few cars on the road. Car of the year is amazing for a car that's only been out for 15 minutes. And, most EPA, most horsepower, they're winning all this stuff. So it's definitely good for the company, but it doesn't mean anything in the sense of stock valuation and price and so forth, which I don't personally pay too much attention to. If I like a company, I like the product, I think it's going to be big in the future, I invest X amount of my money, and I just see how it is. If it's a longer idea, I just hold through it. Because I'm not going to lie, I was a little tempted pre-market when I saw it was up good enough to buy the car, and then some. to take a little off the table again, but I decided against it. So I still have my core position of about 2,000 shares with an average about 1980, 88, 89. So anyway, sitting pretty good. Like I said, you don't really have much to worry about when your average is all the way over, like, over here, and you see where price is. I'm not too worried. Like I said, I talked about that in the room, the win-win mentality. You have your set core, position if you're trading or, a long idea or an investment idea. You have that win-win mentality. And what I mean by that is the stock goes up, great, you're already in it, you're making money. The stock drops, well, then that gives you the ability to buy more and average down. So that's helped me, because initially with Lucid, I was buying it at 28, 29 when I started, and I was able to get my average down all the way down to 19 and change. So having that, buying lower, selling it once it started going higher, and leg out of a little bit, but I still have my core position of 2,000 shares. Figured I don't think I talked about it on Tuesday, and I won't go into very specifics with the trades, obviously, because that's for members, but just some ideas that maybe you can make some money off of, because hopefully when you guys are, at least when I'm up, and I'm sure everybody else that's doing the videos is providing good information, but I'm noticing a theme like, oh guys, the weakness, in the internals and stuff, and we can take a look at that after this. Noticing a theme, and what do we see? We see, we rebounded quite nicely today, but there was a good amount of selling for a majority of the day. We did call the low in the room, which is pretty cool. I'll show you a little, even though it's not the cleanest version of it, it's a little, since I'm a big Marvel fan, I sometimes come up with my own, candlestick patterns and different things, like, oh, that's a, island reversal, and that's a this or that. I have one that's called the Wolverine, and it looked like it was forming earlier, and sure enough, that was the low in the NQ. So we'll take a look at that in a couple minutes and go from there. But one thing I wanted to look about and talk about as it hit a new 52-week low today was Activision. Saw a little bit of buying into the close as well. I do have a position in this. I did go out to March, mainly for a longer position, assuming that everything, the clouds that are around this company, I have a feeling will be cleared out probably by the end of the year. If not, I have time going into March, and I think ultimately people that are making decisions with stocks like this aren't really worried about the short term. Even though I'm not saying those issues aren't serious, I don't think it ultimately affects them being able to do what they do as a company, make video games and stuff like that. Now, I did read something before I went live from, I think, the president of Xbox or somebody big in Xbox, saying that, they're going to look at their relationship and stuff like that. And I think they're just doing that. I don't want to say virtue signaling, but showing that they care. But ultimately, they're not going to not offer Call of Duty on Xbox. Like, that's just ludicrous. So I don't know exactly what possibly negative for the stock would come out of it. But the fact that the stock has almost been beat down 50% makes me think that somebody, with, bigger funds and stuff will come in and start buying this. The question is always when. Is it, is this the low? Is 60.90 the low, and it's just going to start going back up and it won't see this price again for a little while? Because you can see over here, even during the March lows and stuff, mainly because people, the concept of Activision was, well, people can't go outside, so they'll play video games. So that was an idea as a COVID play, stay at home or whatever. But you can kind of see that was a pretty big uptrend for almost, 2 years, a year and a half. And obviously breaking below the 34 on the weekly and below its 200 on the daily. You just been seeing selling. And that was mainly, probably July when all this started. So I think personally the selling is overdone. That doesn't mean it doesn't go lower. I took a trade in this yesterday and I bought a little more today. If it drops a little lower, like low 60s, high 50s, I'll probably add a little more and then just, let it ride and see how it goes. But I'm personally looking for it to potentially do what it did over here before it dropped again, is to trade sideways, at least find that base and then potentially start floating back up, especially into the holidays. That's typically one of the biggest selling things is, electronics, video games, all that kind of stuff. You can't really find a console right now. So that might hinder sales overall a little bit, but the demand is definitely there for video games. And as this stock is at these prices, if you have a longer term idea, and I don't mean like trading lottos tomorrow, I mean like at least going into next year, I feel fairly confident that it should go higher. But once again, just my 2 cents and my own opinion and where I'm personally putting my money to work. Did a scan too towards the end of the day and did find a few things. Like I said, not going into crazy detail, but I did like how last time we played Snap off this squeeze, we ended up doing really well. We actually played it through earnings, which we normally don't do, but I think my calls ended up going up like 350, 400%. So that was a nice trade. I personally haven't traded Snap since. I don't want to say guided, but I gave some 2 cents on the last over here. I think Ed had a Snap trade on, and I told him, at least shoot for 80, and I know a high stretch goal of 85. Came pretty close, 83. 34 is pretty close to 85, and it just kind of consolidated, assuming that it would have a very similar one. People don't want to get caught off guard, so if it was going to have another good report, you don't want to pay more. So sometimes it's better just to pay the 75 or 80 or whatever it's trading at, and go that right. However, with the whole Apple, I wasn't on the call, but I think they did mention a comment about Apple's policy, the privacy thing and stuff potentially affecting them going forward and stuff, and obviously they didn't like that. But one thing I do like is when I kind of what I want to see in Activision, I want to see in Snap, and basically what that is just consolidation, almost like a structure. The base is being put in. Doesn't mean it doesn't drop lower, but normally when you trade sideways for almost a month, it's safe to say that the lows are potentially in, and once again that risk reward. Where would I want to buy on this chart? I mean, I think this is almost pretty close to. Got a little lower, 48 and change and stuff early in the year, and then $50 over here and stuff. But overall, year to date, these are pretty low. I mean, it's spent majority of the time above $53 almost this entire year. So that's how sometimes I'll weigh a trade. I don't mind throwing some money and see if it sticks. Speculative trade, whatever you want to call it, but momentum, high compression squeeze starting. So I figured I'd see how this one goes. I also think I went out till February or March. Let me see. Yeah, it was February. I got I think the 55 or 60 strike, probably 55, because that was at the money. But anyway, just an idea to potentially keep an eye on Snap, because there might be a downgrade. There might be. Most of that stuff would already be probably out over the last couple weeks, but there might be something else. Maybe they lower guidance next week or something that potentially starts that next step lower. That's a possibility, or there could be good news, kind of like pins, a buyout rumor or whatever the case may be that gets it going. But we have a little bit of time on this one, so what I'm looking for is something similar to Activision, where it trades sideways and then slowly starts floating back up. When I play these types of trades, I'm not looking for a home run. I'm not looking for it to go to 83 all-time highs. I'm happy if it gets back to its 200 or its 50. They're pretty close, so if I can catch $8-10 move on Snap, I'd be happy. Maybe even a little less than that, especially if the quicker it works, the better, because I typically like to get the money, grab the money and run. So I don't, even though if I buy calls all the way out here, it doesn't mean I'm going to hold for that, because ultimately if I'm taking a trade, the goal is to make money from it. So if that starts happening sooner than I expected, I'll normally either get out a half or get out of the entire position, because ultimately in my head the trade ended up working. Didn't really take too many as far as a day trade today. The only thing I took was NVIDIA. We had our webinar last night, and I made a comment about this one, saying I wouldn't be shocked if it hit all-time highs. And funny enough, it was about this price, I think, after hours yesterday, like 316, 317, something along those lines. So I was shooting for 325, 330, and it ended up doing pretty well right out of the gate. And then it dropped, and then it came back up a bit, probably a little easier. Maybe I'll switch to my other screen. Give me a second. I don't think it's going to work unless I click this. No, yeah, there we go. All right. So I didn't take it right out of the gate. I wanted to watch it set a little bit, because the overall, the underlying market didn't look incredibly strong right out of the gate. And even though it had good earnings and future outlook and yada yada yada, I still wanted it to potentially balance out. So this is a 2-minute chart, and sure enough, we did gap up, higher, and then we did come down, and actually ended up going long somewhere in here. It was right before it hit 320. I shared the trade, and as soon as I got in, I did a 5 lot. I put a limit order in for $2 higher per contract, and I got filled. Like literally, it was the same. It was like, yeah, I think it was the next candle, so I probably got in somewhere over here, and then boom, I got stopped out. I made a quick $1,000 in like 30 seconds, and it did continue to go a little higher. But the reason I do that is I don't like to just sit and hope and pray it goes higher, especially when it's already up $30, $35 on the day. And that looked like that was the right call. I got out very close to the highs of the day. So like I said, sometimes it does that slow float higher all day long, and you're kind of like, oh man, why'd I sell? But at the same time, I don't know anybody that's watching this that would, scoff at, oh, only $1,000 in 30, 45 seconds. Like, and I personally hate those types of trades when they work that quick. I mean, great, it's quick money, it's great, but I share that trade in Slack, which is how we alert, all members of what we're in, what we're doing. And then I'm literally hitting enter, and then I hear ding, 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 like I'm already out. Like, it's tough, but, it did go a little higher after I got out. Probably about 5-10 minutes later, it's still kind of going. Dropped, tried again, and it just consolidated for most of the day. So not a crazy move, but ultimately, like I said, normally that quick and easier money I do enjoy, and it can offset days. Like I said, Lucid being down $6-7 doesn't feel good when it's one of your biggest holdings in your account. Growth in general got hit pretty hard today. Even though the ES and everything else ended up finishing green, my account felt like, I don't want to say a bomb went off, but I trade pretty small and have amazing risk management. So, I think my account was down 5 or 6% on the day, which for me feels like a big amount, because I normally I'm swinging 1 to 3% a day, if that. So anything outside of that, I think at one point I was down almost 10%, and that was Lucid and some of these other growth stocks that I'm in, getting beat up. Lucid made sense. Some of the other ones not so much. So I don't know if the risk on trade only lasted like 2-3 weeks, because it's been a really good 2-3 weeks for me as far as my net liquid is concerned in the account. And then obviously I know there'd be a drawback, but I was just like, oh geez, what's going on? Why is Rocket Lab and Butterfly and DM and all these other big names I'm in? Like I said, I got a full list on the website of everything I'm in, but I'm like, it felt like I took it personal. It was like everything was coming after me as the ES and everything else was slowly going higher. One other trade I did take today, off of that scan, and I missed it last time. I called it over here, just scanning and looking, and I mentioned going long Cigna at around 200, and that one, and it was one of these days. I can't remember. Somewhere in here, it was nearer 200, so it was probably this day. And I'm like, that's what I like. I like when a stock, if nothing completely has changed in the sense of what they do, maybe their earnings, even though they beat there and they beat recently and they're doing well overall, some things go too far too fast and they come back to earth. I like trying to catch knives. Sometimes I call it catchy knifey. Sometimes they work, and then sometimes you get hit by a speeding train, a bullet train going like 300 miles an hour. Once again, shout out to my boys, risk management and position size. So when you do get hit by a train, it's like a Lego small train, and it doesn't hurt that bad. But anyway, last time I mentioned taking this trade in the room, the stock did go from 200. I mean, depending on when you would have got out, I probably on this day would have got out. Honestly, that's normally my style, is selling to that strength. But even then, that's a $15 move in only a couple days. So here we have a very similar pattern setting up. I'd like to get out before the dividend's paid. So in a perfect world, that squeeze does fire long and potentially test the highs from earnings, or it'd be nice to catch about a $10 move and shoot for the 200. So somewhere in here would be where I would exit. I also went out to actually no, I didn't go out. This one, like I said, I'm expecting this trade to work sooner than later. It might not. I might be right, and that's the thing that sucks sometimes when you're options trading, is sometimes you'll be right, but you'll be early and then theta decay and all that stuff, or the trade will happen 2 weeks later. Like there's been times where I'm shorting Moderna, and the last one I did make money, but I'm expecting a big drop, and the big drop didn't happen for another 3 weeks. Or Upstart, that was an uphill battle, no pun intended. And I the trade expired worthless. I was shorting it when it got up to like 360 or something, and got all the way to 400. I'm like, this is absurd. Like, I like the stock, and I was bullish, and I made money on the long side, but this is just too much, too far, too quick kind of thing. And sure enough, it expired worthless, and then magically the following week is when it decides to be almost cut in half over, that downtrend. So that's just how it goes sometimes. So, but anyway, I'm looking for Cigna, which is not normally something I would play, but healthcare has been holding on fairly well and been doing overall decent. It's the second biggest holding in the S&P, so maybe into the holidays and stuff, maybe we see a little run. I think I have December's calls, so I have almost exactly a month from now, so we'll just have to see how it goes. I don't mind getting out if the trade's not working, but we'll just have to see how it goes. Let me see. I'm still worried about these breadth ratios, all spread, the VIX, the cumulative tick. all the major indicators that I use for internals and stuff, like the once again, under the hood of what's going on. The car can look amazing on the outside, but you hear a sound and there's just certain things that are not looking too hot. Sometimes it could be a foreshadowing of a bigger thing. So breath ratios, like I said, everything else. Tick distribution today was more bearish than anything. So I'm, and then I look up and you look at the ES, and we're 5-6 points from all-time highs. So sometimes you have to be comfortable detaching not only what you think but also what you see. I don't want to say kind of flying blind, but sometimes you'll have an indicator like, man, this thing is overbought or oversold or this or that. And, we jokingly call that the whoopty whoppty, which is just a placeholder for whatever you use. We call that the whoopty whoppty. But whatever tools you're using, sometimes they might be early, or it might be quote unquote oversold for weeks. So if you go short or whatever just based off of one day, then you're going to get crushed. So trading what you see on that side is, you don't want to fight it, specifically tech. I told you guys I would show you that pattern today, which played out. It's not the cleanest setup. And if I was going to really go over this in detail, I would have preferred it looking like it. But basically what the Wolverine pattern is you get one big candle down or up, because obviously you can play the inverse of it. You get one big candle down. There's a little bit of a selling wick. The second candle, same thing but lower, so it'd be new lows. It doesn't have to be new lows on the day, but specifically from that previous candle. And it's a smaller body, but the candle is closing above the wick itself. And then the following one typically has selling, little wicks. I call them buying wicks. If there's the wicks on the bottom, I just call them buying wicks, because it just shows that there's buyers there. They're stepping up to potentially stop it. So this is a 15-minute chart. So you got the first 15 minutes, 30 minutes, and then before this candle closes, you typically want to see. I mean, there's technically a wick there, but I would have liked it to get right about there. And then that you look for this candle to close above this candle. And if you see that is typically a potential reversal pattern. I'm sure there's maybe another technical term for it. We just call it Wolverine in the room. Like I said, not the best, cleanest lookout, because you can see his claw right there, and then normally you'd see a little one right there. But it's still the same concept. You did get that close above it, and it does look like it's a little reversal going on. And sure enough, if you did play that, and I did call that out right about there around 10:30, 10:35, whatever time it was, and then we did end up seeing some follow through, and that was the lows. And we turned around and headed back up. And NQ is definitely the strongest tech in general, mainly off of the back of Apple. That's the other thing too, is a lot of stocks in the S&P and some of these other NYSE and stuff, they could be down or flat on the day. But if Apple or Microsoft or some of these other ones in the XLK and some other the bigger tech names are doing well, they're going to hold the market up. You add one more stock, and it's these 5 stocks control 40%, and these 10 stocks control like 60% of the S&P. Those types of statistics and stuff. It's like, geez, if the big boys are doing well, then everything else is gonna either be sideways or up, in the sense of the indexes. But under the hood, once again, we might see bleeding from some of these other stocks. So that's something to keep in mind, that the breath ratios, all this stuff has not looked that good for the last 3 days. I'm not trying to warn of any selling, because obviously I think tomorrow will be either a pinning day at 4,700 on the S&P, or we take out the highs and we just go to like 47.25 or something along those lines, and just end November expiration at the highs. So either a pinning play at 4,700, something equivalent, or potentially new highs. That would be, or it could be a mix. You get new highs and then you settle at 4,700. I mean, obviously there's 16 million different outcomes, but I the Agamotto, one of the members, got me that, because I always try to look at all the different outcomes. That was quite fitting. Just call me Doctor Strange. But obviously you got to prepare for anything. But the way I would look at it is either a pinning play at 4,700, or we shoot for all-time highs. 47.15, 47.25, and then we'll just have to see how it goes next week. Next week, I might not be here for the holiday. I'm going to go visit some family, so you might not see a video from me next week. But just to give you my 2 cents, since it is Thursday, I'm looking for the traditional, just light volume. I think we have half a day on Friday, markets closed on Thursday, and I think most people that control a lot of money aren't really focusing on making big decisions during those times of the year, specifically like Thanksgiving and whatnot. So I would assume neutral. I don't think we see any type of crazy action going into next week. But maybe the following week is maybe when we see a little bit of selling, or we keep grinding higher, 4,800 or whatever, 5,000, crazy enough maybe into the end of the year, and then just start seeing how inflation and how a lot of these other things affect the market if the Fed changes their tune. And if everything in line, the payroll and jobs and this and that, if everything seems to be balancing or trading sideways to down in that sense, I don't see why we wouldn't head higher into the next year. But if those, concerns are still around, that's what could potentially, I guess, cause us to drop if we are going to drop. Not that I'm calling for it, just, it's good to be prepared for anything, especially when it comes to trading. We'll wrap it up on the profile. Like I said, today was pretty solid. I called not the exact low, but there's certain things, especially with the profile, and you might have other software that can see this. I should just get in the habit of refreshing before I hit record. But we were one time framing higher for this whole week, and by that just means there was did we break below this low on this day? No. Did we break below yesterday's low on this day? No. Did we break below? Yeah. So you literally see that the lows. This is the first time that it's happened in about a week and change. So we took out yesterday's low, the 16th, and then normally sometimes I'll give half back and VPOC and look at the overall profile and see where the most volume is and just see levels that way, more nuanced based levels. This one wasn't anything too crazy. This was just basically the low from 11.15, and I think we missed it by a tick. I mean a point. Yeah, because what was the low? Exactly 1 point. So that was a point of reference I gave once we broke 11.16. But I mentioned it in the room is the tapering off of volume, which is super important because look, you go from you go to triple digits, you go from the 4, and then it breaks down, and what's happening? You notice that the numbers are getting smaller and smaller and smaller, and then it basically hits a wall or hits the e-break or whatever, and you only get 29 contracts out of almost a million on the day at the lows of the day. Doesn't mean it's always going to be the low, but that pattern is almost always the low of the day. Doesn't mean that we don't go higher and then break that, but if you are seeing internals or ticks or other things showing you that there's strength in the market, and you can see that with either price action or whatever tools you use, having this to be able to see it kind of visually as it's happening, I think is a great tool. And I give those levels in just my 2 cents, obviously when it's important. But yeah, I mean, like I said, we opened up, dropped a good amount. I mean, that was like a 30-point drop almost in the morning after the open, and then regained it all, got new highs on the day towards the end. You had VPOC up here at 4701.75, pretty close to that 4700 area. And then we have our TPOs basically right below 4700, where the most time was spent. And then here we are, or I guess, yeah, that was funny. The TPO point of control and settlement are right on each other. It tricked me for a second. I'm like, why is it there? Anyway, but look at after hours. We opened up and we didn't look back. We have not dropped below since basically 6 o'clock on. And then we're building out higher than yesterday. So this is all overall a bullish, overnight session. It's still way early. Market doesn't open for another, 12 hours or so, a little more. So a lot can happen, but it's setting up to make it look like we either open at all-time highs or we balance in this area and then we hit it during the day. So that's basically all I have. Hopefully it's been helpful. You guys have a great night, and I will, I guess, catch you on the next one. I more likely will not be doing a video next week, so happy Thanksgiving. Enjoy it with your family. And as always, we are here. I'll include our website information, Facebook, and Slack in the description, so you guys can always get a hold of us if you want to. All right, take care, and happy holidays.